Good morning, good afternoon, good evening, and welcome to the Bull versus Bear webinar here on Tuesday, the 13th of December. Steve Miley on the call for trade day. Welcome, everyone. Apologies for the slight delay starting here today. Again, a few little technical issues I'm having in here at the moment on my end. All sorted now, though. I just wanted to make sure everything was stable before I came on. So yeah, we'll do a usual regular run through in here today, calendar, macroeconomic events on the major news wires, and we'll take a look at the charts. Clearly CPI today. I will look at some trigger levels on the charts, but to be quite honest, trigger levels are important if you're going to want to trigger into the trades, obviously. So I will define those. But I mean, the way markets have moved on the CPI data, the last two releases, I think, for me, it's very much markets are setting up more bullish, clearly. And the fact is, the last two moves have been seen bullish moves. The last one was straight up. The previous one was down and up. So up has been the major theme. So you could have a correction either way. I think if it goes down, you can go with it initially, but be very careful for it to reverse back higher in here. If it goes straight up, I think you just go with it. That's my view. So if it's a higher than expected number, probably down, can go with it, but be very agile and ready to get out, because this thing could easily turn on a dime and be significantly back higher, like it was back on the release in October. And then November was pretty much straight up, as far as I can remember. Yeah, I'm 95% sure it was pretty much straight up and kept going. Remember, we'll look at the chart. Remember, these are big days. The last two reports have seen the markets move way through what, a normal trading day. We're talking maybe 2x, if even 3x a normal trading day. So if you get on these moves, don't be quick to take profit. If it dips back against you, try and stay with the trade, guys. In here is my biggest advice, because if you're in the money, really try and milk it today, because these days are not coming along too often. When you get these they are coming along often enough, to get real opportunities, but you need to grasp them and not be booking, be a little bit braver, and try and run those profits when you're in the money with these trades is my key advice. I've said to many of you on one-to-one calls, I've said to you on the webinars as well, play devil's advocate with yourself. Let's say you're long and it's going up, right? And it starts to dip and you get a bit fearful, right? Say to yourself, would I sell it here? If the answer is a categoric no, you would not go short, then why are you getting out of your longs? Try and think, play devil's advocate with yourself. Try and put yourself in that position. If the answer is no, you wouldn't take the opposing view, then why are you cutting the position you have? Okay. Right. A question from Clinton regarding the UK data. We had the employment report in here. Average earnings index, as he says, is a plus bonus, is fairly standard in here. The employment change. So in here, the employment change is that you asked, is it the jobless claims? So the employment change is actually like the NFP piece of data, okay? Changes the number of employed people. That's the employment change. The claimant count, is the number of unemployed people. It measures the change in the number of unemployed, So it is similar to jobless claims, So in the UK, during the period, a rising trend indicates weakness in the labour market. So the claimant count in here is the more people reporting as unemployed. And then the employment change is similar to the NFP, the non-farm payroll number, changing the number of employed people. Okay, and the unemployment rate, as you would expect, the unemployment rate. Okay, so I hope that clears that up for you, Clinton. Good question, though. We've also we had that this morning, kind of mixed in here. Employment change beat expectations. We were looking for a drop. It was up. The claimant count was higher than expected as well. So even though you've added more jobs, you also got more people claiming for unemployment. Average earnings was actually less than. So this is, even though this is in red, you've got to remember this is an inflationary pressure. So this is like their software not really doing its job in the current climate. So obviously higher earnings would be seen normally as a positive, but higher earnings in the current climate is seen as a negative because it obviously feeds through to inflation. So the fact that this is below the consensus is actually a positive. And then the unemployment rate came in banging expectations. German CPI bang in line with expectations in here. And okay, I'll come back to it in a second, Clint. And let me just finish this bit up here. German CPI bang in line with expectations. German ZEW survey is an important survey. Okay, it's an economic survey in here. Net percentage of positive and negative responses around the expectation of economic in 6 months by financial analysts. Okay, so it's from banks and financial market companies. Okay, so this has always been a fairly important survey out of Germany. They also do it for the Eurozone as a whole. So you can see current conditions worse than expected. ZEW in here, economic sentiment index overall was better than anticipated. So going back to when the claimant count was 10 times the explained claimant count in here. Well, yeah, but 10 times. But remember, it's not. I mean, 10 times, yes. But I mean, if there was one people, if the expectation was only for 1,000, it was 10,000, it'd be 10 times as well, right? If the expectation was for only one person, it was 10, it would be 10. So this is on relatively small numbers, right? So I don't think, the 10 times is not so much 10 times. It's actually like 17,000. If you think, for this, the UK as a population now, I can't even think, 70 million, I think. I think the working population is 35, 40 million, something like that. So the difference between an extra 3,000 and 30,000 people in the whole country is only 27,000. So the absolute number is the more important number in there, really, as opposed to it being 10 times. Okay, I think the 10 times clouds it a little bit in there. Yes, it is 10 times, but I think that clouds it. Does that make sense? It's the absolute. And 25, 10, 25,000. Yeah, okay. I'm not going to labor the point. You got it. Okay. Right. So let's focus on, what's the most important thing of the day. I've been counting down to this for a few weeks now. CPI data out of the US. It's going to be critical, obviously, guys, right? Bear in mind that we do get Fed tomorrow. Then we get the Bank of England and the ECB on Thursday. And we get the flash PMI data from global S&P on Friday. So it's a super busy week in here. No surprising, yesterday was a bit of a chop day. Markets were kind of relatively quiet, got a strong rally right on the close. Real pop higher on the close, and we're higher again in here today. But, expecting today's price action to be significant. I'm coming into this bullish. The last two results we had, one was more supportive. Last one was more supportive of the market, and the market went straight up. The other one was actually worse than anticipated, as in higher inflation rate, and the market sold off and then rallied. So net, the market has tried to rally on these numbers by the day's end. So I'm coming in with that approach. The market is in an uptrend anyway. This is the stock indices, obviously, I'm talking about here. Markets are generally in an uptrend, even though a bigger uptrend. Since October, primarily driven by those two inflation reports in October and November. If I just jump to the chart anyway, there's the October number. So initially spiking down to a new low for the year. That was the low for the year. On the third, after that result, I said, I called it here on this call that I thought that was the low in the market. It has been the low in the market. I think it's probably the low of this whole cycle. I don't think we're going below that low again in the next few years. Certainly, I think it's the low in the cycle. It doesn't mean we're going back up to the highs for the year, but I mean, certainly not this year, even in 2023. But I think the low has been marked now. And then there's the next one there. Is this a straight up day on that one there? And and then we had Powell a couple of weeks ago. That was the other big day we've had in here. So market's really setting up, and I think this underlying trend is still higher. The bigger trend, despite giving up the advantages or the positivity from the rally after Powell, the market did hold right on this little swing low in here. We flagged that. It held at that swing low there, and it's rebounded in here at the end of last week and then through yesterday. Strong rally into the close, higher again, obviously, today. The market, for me, sets up more positive, okay? So I'm just going to jump back to the data. That's the big focus on the day. If we go forward, 5 things you need to start your day. Inflation, okay, we know all about that. We're watching for the data. Sam Bankman-Fried has been arrested. Chinese COVID is rippling through the nation's financial industry. In here, nothing to really concern us and what we're looking at. Futures are up overnight this morning. Okay, and coming up, we know what we're looking at today. Okay, so equity index futures rise, traders await CPI. No surprises there. There's really not much more to add. Bond traders bet on recession level inflation plunge next year. Bond market is correct. US inflation. I'll share this one. I haven't actually gone through this in detail, but I'll share this one if you want to take a look at that. Gap between the yields on 1 year Treasury inflation protected securities and similar dated nominal government stands at 1.8%, reflecting market expectations for the average inflating rates over the coming year. So the market is still anticipating that will require price gains to slow by more than 5 percentage points. Okay, so unlikely for that happens. So what else do we have in here? More crypto woes. Binance have halted withdrawals of its major USDC stable coin. Futures rising ahead of the CPI, and then we've got Fed obviously tomorrow. And then options traders brace for big swings of US CPI data. Fed meeting looming, obviously. Options markets pricing in obviously higher volatility around the fact that we've got these events. European stocks are up. Remember, we had the late rally, so European stocks were closed when we got that late rally from the US last night. So markets have reacted to that and are obviously higher in here this morning. So European exchanges, the FTSE UK index is up 0.4, DAX up, the German index up 0.8, and the CAC French index just under 0.7 in here this morning. And obviously US stock futures in here, having had the leap higher late in the session yesterday. We've had a follow through today, about 0.5% up for the major indices going into today after a leap of about 1 to 1.5% yesterday. Right, let's run through the charts. A quick nod to the CME tool. It's been sitting, well, it's actually dipped a little lower in here. It's been sitting between 70 and 80, mostly between 75 and 80 for the last few weeks. Dipped a little lower. So there's still an outside chance of a bigger rate hike going into tomorrow. Looking at the charts, for me, I mean, it does set up more bullish in here. You've got this underlying higher highs and higher lows. We held that support. This is the S&P, remember. As I said, impulsive on the close yesterday, follow through on the upside today. You can see we've taken out that swing high there from last week. And if we go into the 15-minute chart, so there's the impulsive move on the close last night. And then follow through in here this morning. There we've taken out the resistance in here. This point here we took out already, and now up through the resistances here. You can see from where we got the acceleration lower last week. So all of this sets the market up more positive. Really on the top side now, the problem you have is you've kind of gone through those resistance points here already, okay? And you just flirted through those. So there's nothing really to trigger us in. I mean, I think you just have to go with a break above, wherever we're trading, really, if it goes higher. On the downside, you've got this little internal trend line in here. So we've got that strong base as well. 1, 2, 3, 4, 5 points on the lows in here. And remember, these lows coming off of that low that I flagged over here, this low over here from back on the 17th of November. So really strong support down there. Really strong base has been built. Where do I look on the downside? Where do you trigger into a potential short? Well, you got this very accelerated trend line comes up through here. You could, set it up down through there. At the moment, that's sitting around 40.35. On the top side, though, you've kind of got nothing to trigger you in. The only thing you're going to be able to put into here, I'm going to zoom out a little bit more, is of the recent activity in here. I'm putting Fibonacci retracement on from the low to where we've sold off from in here, and you can see we're already now, so those highs there were around the 50%. Next levels are 61.8. I think it's too high to have the trigger in up through there. It's around 40.67. I think it's too far away. Personally, if you want to go into with a position, I'd be going in long, with a relatively agile stop on the downside. Yeah, you don't want to stop too far away. But for me, it's all setting up very bullish in here, and obviously you've had, but if this number prints high, it's going to sell off, and you probably want to be short initially and then maybe reacting to whether then we get the turning point. It's tricky, but once you get into this trade, once you know which way we're going, you just have to run with it and milk it, guys, right? So just it's a matter about being agile. By the way, in here, everyone, I am looking at the March contract now. You'll see, okay, so the liquidity is split between the deck and the March. This is the last week of trading. For me, probably best to be flipping over to the March contract now. It is the main month. It is the lead month in here now. So I think trading on the March contract is probably best. But there's no reason you can't trade on the deck. There is still good liquidity in the December contract. Let's go and take a look at the Nasdaq. So the Nasdaq did undercut the lows in here. This is on the daily chart previously. But then again, decent rebound, firm rally yesterday, took out the high from Friday in here this morning, and then pushing up into further resistance. A little bit better defined in here on the Nasdaq in here with the upside levels. You do have a trigger point on the Nasdaq. So in here on the top side, we haven't gotten it yet above these peaks here. So if you want these peaks up here on the March contract are 957, 11,957, 11,9, yeah, both of them 11,957. So you do have a trigger point on the Nasdaq up through there. Again, I'm just going to zoom out a little bit more to 1 hour chart, go for the Fibonacci retracement and see what we have on that from the low. And you can see through the 50 already, and then the 61.8 is some way away again. So I think those peaks there, if you want a trigger point on the top side, 957, and then going on the downside, I'm going to just zoom back in again to a 15-minute. Again, looking at this uptrend line that's just been established more recently, be looking if it gets back down through here. Only down through there, and then that's coming in at the moment. It comes in near the little swing that we've had in the last hour or so. So actually the trend line's a lot lower, down at like 11,850, 860. The little swing is 11,874.75. So there's downside trigger points. I'm just going to zoom back out again and look at the potential targets, right? So remembering here the kind of moves we had in here. So back in October, the high low was 35.30, so best part of 37.30, 200 index points, okay? 35.30, 37.30. And here in the November report, we had high low 37.83 to over 4,000. So that's 217, 225, 225 index points. Okay. There's no reason this thing, I'm not saying it's going to move 200 index points, but it can certainly hit that high there. Okay. On the March contract, S&P 41, 42 and a half. This high here is possible as well. 41.94 and a quarter, maybe even as high as this high over here, 42.50, right? Those are all potential targets. So don't cut the losses. Sorry, not the losses. Do cut the losses. Don't cut the profits too quick. On the Nasdaq, where can we get to? Yes, it can definitely get back up to the recent high. And again in here, look at this move here. This one here, this one's smaller, but what was the high low there? 10,600, say. 250, so we're 650 points there. On this one, it was a whopping high low, say 11, 788, 800, over 800 index points. Okay, so there's no reason this can't get above that peak there. And then you're looking at highs from over here. I don't think it's going all the way up to this one up here. That's up at over 13,000. Can it go to 12,800? Can it go to 12,650 kind of area? Yeah, it can. Yeah, so remember to run those profits. A quick nod in here to bonds and commodities. So more lackluster performance here. Oil has rebounded as we got the rebounding risk assets. Finally, a little bit of a setback today. Still trades heavy. Oil looks negative to me still, despite the rebound. Didn't take out, the resistance we really didn't take out is up here around 75.40 kind of area. didn't make it, rolling lower. I mean, for me, I think the threat for oil is lower. Obviously, if you get a risk-on move, this is probably going to be pushing us higher. So maybe go with the risk-on move. But if we get a risk-off move, this is going to be a big, big negative for oil. Oil would be your favored sell, if you want to sell something today. Okay, it still trades heavy for me. If we take a look at gold, first of all, on the daily chart, sideways city, a little rebound back down yesterday, back up today. No strong view in there on gold. It's kind of chopping up, as you can see in here, chopping up. I've got no strong view there on gold. I mean, it's really difficult to get a view. I mean, you can just go a breakout from recent highs and lows, if you want to trade it in here. It has been, a significant mover, on the CPI datas. So let me just... but not as much, kind of stuff. You can see in here, we don't get the same moves that we had on the previous, in the October and then the November data. We got it a bit on the November data, not so much on the October data. Okay, so gold not reacting as much to inflation. The inflation data, it's a chop fest at the moment. I've got no strong view in there on gold. And finally, we'll round off. We'll take a look at the treasuries. So I'm going to be on here. This is the 10-year. In here to the market has dipped and bounced yesterday, flirting with this uptrend line, trying to rebound. I think the underlying trend is still up. That would sit with a lower print on CPI, less inflationary, less hawkish Fed, more dovish Fed equals higher prices, lower yields. So yeah, I think upside risk for me going into today. Back up to the highs certainly, is possible. Back up to the recent highs in here for the bond market. Zoom in here, got a short-term chart. Let me take it to 15 minutes. In here, it seems to be forming a bit of a base in here at the moment, obviously rallying in here at the moment. Let me get rid of all of this old analysis. And for me, probably the critical line in here is this downtrend line here that runs across. You want to be watching. That's terribly drawn. Let me get rid of that. We'll do that again. So off the peak here. Actually, got to snap it to that one there, and we'll extend it out. And so that would be a move up through 130.13 is the trend line right now. Okay, so up through there signals more bullish. But again, if it goes, you probably just go with it anyway. Okay. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Have a good one. Helmets and goggles at the ready for CPI. Remember, try to run those profits. Most of you are quite brave and quick to get positions on. Keep that bravery when you're in the position. Try not to have that fear come in. Yeah, that negative emotion of fear. That you're all kind of, and that YOLO. A lot of you guys are in that YOLO mode, and and a bit of FOMO going on. But once you're in into the position, it kind of changes, and then it's more like, book the profit. The trick today is going to be to let the profit run, and you could easily see 2x, 3x what you normally make in a day if you get into the position and let it run. Have the confidence that this market can move. Equally though, right, if it starts to more aggressively reverse, get out and reverse, right? Because, we saw what this did on the October release, right? Aggressively down, and then it did reverse. So, but try and stay in that trade. But if it does reverse, do try and don't stay with it. If it's showing you it's reversing, you make sure you do cut and reverse. Have a good one, guys. All right, take care, stay safe, and I'll be back with you, and we can pick the bones out of it all tomorrow. Cheers. Bye.